right, one more time. All right, that's good. That's good. Let's get the ball rolling. Hey, Lucky, how you doing today? Almost ready. Almost ready. That's ready. That's going. That's going. That's going. That's going. That is right there. This is right there. And that is right there. And nope, don't want that. I want that. And I want you to want me. Yay! All right. Good evening. Good evening. Good evening. Where are we? Okay, that's live. Live, 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 live. Wow, all these cameras going live. Okay, hold on. I got to get this thing set up. Only 2 cameras actually allow me to invert the camera so you can actually see it normally. There we go. And there we go. And there we go. All right, all right, all right. Hey, can you please show one example what and where you sell the option today on Monday? Not quite sure what you mean by that, but hey, well, let's take a gander at it. We got Peabody up right at the moment, so Peabody, we'll take a look at that one for you. That being said, before we even get started, let me first turn my fan up a little bit so it's a little bit cooler in here. Can't seem to make up its mind whether it wants to be cool or whether it wants to be hot. Who knows? So anyway, Lucky would like me to show an example of what we're doing. Now, Lucky, you've been here. You've seen what we're doing. Okay, so this morning, Peabody, BTU. Okay, you either like the company or you don't like the company. First thing I want to look at every time, Lucky, every time I pull up a stock, I'm looking at the exact same things. Where's the high of the year? Where's the low of the year? Where was it a year ago? Where is it today? Mark, greetings from Northern Ohio. People actually live in Northern Ohio? Holy cow. How you doing, brother? Nice to see you. So anyway, Lucky, I'm looking for 5 things. The high, the low, where was it? Where is it? Then, more importantly, what is the momentum? Where is it going? Well, it went up, down, up, down. What's going on right there? The high of the year is there. It drops down. Now here's a new bottom right here. Not a bottom of the year, but a bottom of the point that we should be concerned about. Because right here, right now, that's what we're looking at. A couple of weeks ago, there's the top. It drops back up, back down. New bottom yesterday or Friday. So today, we're up. We're at 24.67. So simple, 24.67. The closest strike price is going to be the 24.50. It's not that difficult. I'm buying it, I'm selling it. In this manner, or this instance, I'm buying it for 24.67, and I'm going to sell it for less than I paid for it and still walk away with a profit. I know, it's crazy. Buy a stock, sell it for less than I paid for it, still walk away with a profit. It's a strategy I created for my 9-year-old daughter. 9. She was 9. You should be able to get this, Lucky. All right, so 24.67 current price. I buy it at 24.67. I sell it 24.50. I'm going to pick up this premium right here. So if you add the premium to the strike price, that's the price that I'm walking away with. Even though I bought it for 24.67, selling for 24.50, I'm going to add 69 cents to that. So that means I'm selling it for 25.19. That's my profit. But it's coming in 2 different avenues. One is the stock itself. 2 is the stock option. So the stock option allows me to sell it for the certain price by a certain date. So the certain price, well, the strike price, 24.50. The certain date, well, that's this coming Friday, the 15th of May, 4 days away. So what am I making off of this trade? So I'm making 69 cents, up 24.50, but remember, I'm losing 17 cents right off the top. So you take that 17 cents off of this, you add that to that, boom, I'm walking away with a profit even though I'm selling it for less than what I paid for it. It's crazy, Lucky, it really is. I'm buying it for 24.67, selling it for $24.50, less than what I paid for it, and still walking away with a profit. Let's see what that looks like. All right, let's get rid of this. Let's change this right here to covered stock. Now, for those of you that are new here or just got here and not quite familiar with what I'm doing, and you can't see everything, this screen behind me, this one here, is live on YouTube at this moment in time. So you can go to your big screen TV, pop it up and say, hey, let's go to YouTube and check out the 10-Minute Trader live. So you'll be able to see these little tiny numbers, which you probably can't see on your phone or your computer. But on the big screen TV, they're easy to see, especially when I circle them like this. Okay, easier to see them that way. So let's take a look at a covered call for Peabody Energy. The exact same, almost the exact same price I'm paying for it. I only want to do one contract just so you have an idea of what it looks like, what it sounds like, and how it should play out. Sean, dude, thank you, really, brother, thank you. But once is perfectly fine. Thank you, Sean. Just do it once because it clutters up the screen and I can't see the other questions. But I do appreciate what you're trying to do. Thank you. All right. This is what it should sound like. Are you ready? Buy one covered call BTU, Peabody Energy. 15 May 26. That means that this option contract, remember, it's two separate trades. I'm buying the stock and I'm selling the option contract for someone to buy the stock from me. Buying the stock with the stocks, and with the options, I'm selling someone the right to buy it from me for less than I paid for it. $24.50 is the call option. That's less than I paid for the stock. Okay, profit $79. Not a lot, but I'm not looking for a lot. What I'm looking for is consistency, predictability. Thank you. Yeah, Sean, thank you very much. It was very appreciative. Really, it was. But it clutters up the screen and I can't see the other questions. But thank you. So what I'm looking for, I'm not looking for a huge profit. And I say that right up front. If you're looking for huge profits that are going to change your life, you're in the wrong place. I'm an old dude, okay? I'm 62. I'm retired. So I do retired stuff. Okay, I'm looking for a simple, safe, predictable, consistent 1% every single week. That's what I'm looking for. Okay? So, simple, safe, predictable, consistent 1% every week. The stock we're looking at the moment is called Peabody Energy. Okay, lucky one, and take a look at the sample. So, first of all, it's got to make sense. That's number one. Out of all the questions you could be asking me, right? Does it make sense? That should be question number one. Question number one, does it make sense? Buy a stock. In this example, selling it for less than I paid for it and still walking away with a profit. That's crazy because stocks go three different directions. Really, they only go up and down, but it looks like sometimes they go sideways, or they can call it nowhere. It goes up, down, up, down, up, down. Looks like it goes nowhere. So, if I'm making money, the stock going up, great. I make money if the stock goes sideways, doesn't move at all, great. Well, the stock can even go down a little bit and I'm still making money. I get all three going in my direction. Now, if it drops more, no. Okay? But stocks do go up. They do. Uh-oh, I hit the wrong button. Damn it. Damn it. Double damn it. Back where we were. Okay. All right, so 79 is the profit, 2,300 is the investment. Let's get up that calculator and tell me what it says. Okay, calculator, here we go. Profit, $79. Now remember where I said simple, safe, predictable? Remember that part? Simple, safe, predictable. Well, I know exactly what I'm making on this trade before I even do it. Now, most people buy a stock. I beat the S&P by 48%. Way to go, Christian. The choo-choo train got derailed. All right. Simple, safe, predictable. I know what I'm making before I even do the trade. Now, most people buy a stock and they have to wait and wait and wait and wait for the stock to move. Well, here I don't have to do that. Here I'm buying the stock, whatever the current price is. I'm turning around and selling it for the closest strike price I can find, whether it's high or low, I really don't care. But am I walking away with enough money? I'm looking for 1%. So $79 is the maximum profit on this trade. That's predictable. I know what it's going to be. The investment cost of the trade, including commissions and fees, it's right there. Okay, 2,371. Now that's all cash. There's this number here, which is margin. I'm not going to talk about margin because it's a little riskier. Niculator, how you doing? All right, nice to see that. So let's check it out. You take the profit, 79, divided by the investment, 2371. What is the rate of return? Fine, let's do it. Okay, divided by 79, divided by cost of the trade, including commissions and fees, comes to a grand total of 3. Lucky, 3.3% for 4 days. 3.3% for 4 days. But do you like this company, BTU? Either you like it or you don't. That's it. Number one, you got to like the stock. Number two, you got to be okay with holding it and never selling it. Okay. When you sell what you paid for, got it? Does the shares called away as soon as it starts going down? No. Lucky, what's happening? Okay. When you, all right, hold on. I'm going to save this one because it's 3.3%. And I don't know about you, but I like 3.3%. Peabody Energy. You either like it or you don't. It makes sense or it doesn't. You buy it or you don't. It's not advice, it's educational, and it's entertaining. Let's entertain you. Okay, where is it? Here we go. First one of the evening. Whoops, I don't need this anymore. No. There we go. There we go. BTU. All right. By one covered call, BTU, Peabody Energy. 15 May 26. All right. The strike price, $24.50 call option, giving someone the right to buy it from me anytime they want between when they pay for it and the expiration date, which would be the 15th of May, also known as this coming Friday, 4 days away. So you got 4 days to do this. I'm going to get to your question in a second, Lucky. I haven't ignored you. So here's the profit. Here's the investment. It comes to a grand total of 3.3%. All right. All right, make it a little bit smaller. 3.3. Okay, we want to do this one more time. Black Tuesday. Tuesday. Yay! All right, change this back to white. Back to white. And there we go. All right. Now, Lucky, here's what's going to happen. All right. Well, here's what might happen. Well, it actually is going to happen one way or the other. So let's look at both scenarios. Okay. This is where we are right now, Lucky. Are you ready? The stock was up here. All right, let's look at the last 30 days. 30 days ago would be the 11, which would be right there. Here is the last 30 days. 30 days ago. This is today. This is what happened today. This is 30 days ago. 30-day high. She drops back up, back down. 30-day bottom right there. Now she's moving back up. So you need to decide, is this something that you like? Great. Now, two things are going to happen. One or the other. That's it. Two things. If it is below $24.50 by Friday, I keep the stock, I keep the premium, and I do it again next week. Got it? If the stock is above $24.50, someone, whoever bought that option from me, is more than likely going to take it away from me. Now they own it. I get to keep the premium, the option money, and I get all my money back less that 17 cents. Okay, I'm okay with losing 17 cents because I'm making it up on the premium because the premium's higher. So no matter which way I look at it, number one, does it make sense? No. Do you wait 3 up candles? Usually I do. I was just showing you this as an example. You asked for an example. This is the example that was right here in front of me. Normally I get 2 days to the upside. Today would have been 1. Tomorrow would have been 2. Then Wednesday, hypothetically, would have been 3. Okay, that's what I wait for. But I'm showing you as an example. That's all this is an example. It's entertaining and it's enlightening. So hypothetically speaking, if it's below 24.50, I keep the stock. I write another covered call next week. If it's above 24.50, someone takes the stock away from me. I get all my money back and I get the profit. And then I have the burden. Yeah, I think it's funny when I say that. I have the burden of having to pick up something next week. Is what it is. All right, so hopefully that makes sense, Lucky. Let me take a break to say hello to everybody who's in the house. Who's in the house? Mark Stuckey. What's happening there, Mr. Mark? Yep, from Northern Ohio. I didn't believe anybody actually lived in OH10. All right, that being said, who do we have down here? The first paper. Is it stock market? Yeah, it is. I'm up 1,500 since last Wednesday with AG. Uh-oh. What the hell is AG? I have no idea. Let's find out. AG is First Majestic. Never heard of them. Never a good sign if I've never heard of it. No, I mean, for me. All right, so I never heard of it. Big deal. Let's see what the numbers look like. Let's see what the stock looks like. Let's go through the whole thing. Here's the high. Here's the low. Here's where it was. Here's where it is. It goes up. It came down. Now it's going back up again. This right here would be a no for me. And the reason it would be a no for me, let's zoom in a little closer, and you will probably see it once I show it to you. What do you think? There's the last 30 days. The high today, the low 2 weeks ago, 30 days ago, and today. All right, so it went up, it went down, now it's up. It's at the 30-day high. I don't buy anything at the 30-day high. That's time for me to bail. Sorry. You're up 1,500. Nicely done. Good for you. All right, Sween Dog. 36.8% return since 12/25. Cool. Is that good? Well, yeah, it's good. Any rate of return on the positive side is always going to be a good thing. What you're doing and what you're trying to do, I'm totally clueless because this is the first time you and I have ever chatted. Okay, so is it good for you? Maybe it is. Maybe it isn't. Okay, but if you're happy with what you're doing, awesome, wonderful, great. Always move the camera a little bit, please. Got issue again. All right, there we go. Sorry about that. It happens. I bump into the table and everything moves around. Happens once in a while. All right, next. Kissable Silver Mine. Oh, nice. Yeah, silver's supposed to do some crazy stuff in the near future because we only have so much of it. And they're using it faster than they're digging it. They're using silver faster than we're digging it out of the ground. So what do you think is going to happen eventually? All right, let's go over to TikTok, float through some of the hi, hellos, all that kind of nice stuff. See who's in the house tonight. Wow, a lot of people just stopping on by. They stop by, they come, and they go. Okay, Ondor, Douglas, Johnny, Kevin, Edison, Dizzy 17, Hawk, Will, Doobie Doo. All right, Pierre, Mikey T. Mikey T's in the house. Austin, Pam Pum. Okay. Ahmed, John, Romeo, Daniel, JT, J Trader. Money Man. Okay. Caden, Felix, Rock, Mark, Devil, Antonio, Antio, Tim, David, Nanya. Hey, Nanya's back. Nord, Envy This. Okay. L, Big Pumps, Jit. Okay. Judah, Judah Smith, Waylon, Hanks, Bob, David, Looney Sheep. Interesting. All right. Samar. Oh, you can manage AI's unmarried in settings. Humories. What? Oh, summaries. To get the S on one line and the humories on the next. Like, what the hell word is humories? It's summaries. Okay. Progressum. Let's go. Let's go. Let's go. Let's go, little darling. Oh, come on. Okay. Real estate. Asbear. Skitch. New dividend stock talk. How the hell can I be joining my own live? Beware, there are scammers out there trying to scoop up your name, send you a text, send you an email, send you an Instagram, send you a WhatsApp, send you a Telegram, pretending to be me. This last I checked, there was 37 people pretending to be me. So I tell you, and I say this live every single day, I don't do that. You want to have a conversation with me, pick up the phone. Send me your number. Either go to Calendly, book a call on the website, or just drop your name in whatever website you're on. Now, we're live streaming on 13 different channels. So whatever channel you're on, there is a bio somewhere that will lead to an email that comes back to me. If you want me to call, do that. Did you get the car back? Car's going to be delivered tomorrow morning. Car's going to be delivered tomorrow morning. I'm excited about that. This car cost me a hell of a lot more than it was originally intended to be. Because you know what? You buy it sight unseen, it's going to cost you X dollars. Then when you get there, you got to do this, that, and the other thing. Okay, great. Put a new set of tires on, do this, that, and the other thing. And then all of a sudden, something happens and you got to ship the car home. All of a sudden, now that car that I paid twice as much than it's worth. Because what it was worth is what I paid for it. Now it's twice as much as what it's worth. But you know what? It's a nice car. I'm going to enjoy it. All right. That being said, let's keep on progressing. All right. Do I trade gold? No, I don't. Now, the reason I don't trade gold, because I actually have some gold. And never, ever, ever has anybody come to the house and say, hey, Mr. James, I see you got some gold. Here is your weekly allotment in cash flow for the gold that you own. Gold does not give you cash flow. So, and I can't take a bar of gold, go down to Starbucks and scrape off a little bit of gold. Here you go for a cup of coffee. It doesn't work that way. Gold is great for what it is intended for. Storage of value. It doesn't give you cash flow, so no, I don't buy and sell gold for that. Okay? So, let's keep on seeing who's here. As Baron New, okay, all right. All righty. Come on. There we go. That works. That works. All right. Kells, Mad Dog, Dog Pound, Duart, Chris, Oshar, Mark Allen, Miss Trina. Good evening, Miss Trina. Dale Talk, Cody, Mano, Micus, what's going on? Jack Bell, Andre, Hugh, Jace. Wow, you guys have no questions, just all saying hi. Cam, how you doing? Not good. Vic Shop, Big Booming, Bill, Roberto, ¿qué pasa, Roberto? G Long, okay, Diego, James, African Man. Well, you got a Florida man, so why not have an African man? All right, Milo, Heartland Plant. Is that something I need to know? Heartland plants, because I'm into planting and I'm into self-sustainability. So if, maybe, send me a DM. I'd like to hear what you got to say. Mauricio, ¿qué pasa? Experienced one. Matthew Howard. Michael Smith, Low Rider. Wait a minute. Low Rider goes a little lower. I don't have a soundtrack for that one, but I like that song. Low Rider. Was a little high. Ken, Aiden, Inspection, Mako, Adine, Gibbs, Free City, Kissan, Jay, Student Research, David Thompson, Findoodle, TikToker, Graham, Jay London, Hammer. Wow, all these people saying hi. Can't all be here. There's like hundreds and hundreds of them. But BTU goes X next week. Okay, Jonathan, thank you for chiming in. Jonathan, you've been here long enough. You know that I don't really care about the EX dates. I don't. If the stock looks good, if the momentum is right, yes. Okay, I always pay attention to the momentum. The momentum is more important to me. Okay? April, Lacey, Bobby, Hudson, Jacko, Oscar's House, Baked Bananas. Ooh. Scott Hackler, Thomas, Fly Guys, move the camera. I already did that. Kodiak, that's better, thanks. All right, hello, Lucky. Are these candles behind you per day? No, I don't do hourly. I don't do minutes. It's one day at a time. Okay, I live my day one day at a time, and I don't do hourly, and I don't do minutes, and I don't stare at the computer all day long. Contrary to popular belief, I'm on my computer in the morning for about an hour and a half. The only reason I'm on for about an hour and a half is because the live trading group. Okay, see, I have a live trading group. We do all trade together. There's about 40 of us. We get together and you watch as I trade, and I ask questions, you answer questions. And then I take a look at what your account's doing and then give you pointers. I can't tell you what to do, but I can give you the ifs, ands, and whats. Okay, if you do this, this could happen. If you do that, that could happen. What about this? Did you think about that? See, I can do that, but I can't tell you what to buy and I can't tell you what to sell. Okay, so for my own personal accounts, it's like 10 to 15 minutes. That's it. But teaching other people, it's a little bit longer. And at night, believe it or not, I turn my computer on. I think it was like 8:45. It's supposed to be live at 9, but I turned my computer on 8:45 because I got to get 9 cameras. Oh, I mean, not 9. 1, 2, 3, 4. 1, 2, 3, 4, 5, 6, 7. It's only 8 cameras tonight. Ingham, John Birmingham. What's happening, John Birmingham? You're new here. How you doing? How you doing? Anyway, all right, let's keep on doing this. Think that's better. Hello. You write any stocks today? Absolutely, I did. Felix or Relix. How come 3 accounts? They're all real? I have 7 accounts. One of them is a paper trading account because I've been using it so long and I use it for coming up with new trading strategies. Okay, so I've been investing for over 30 years. I get 7 accounts that I share 3 of them publicly. Okay, one is a paper trading account because I do strange and crazy trades with them just to make sure I'm right. That's it. Am I right or am I wrong? So before I put my own money on the line, I want to make sure that the strategies I'm coming up with are sound and actually work. So yeah, I have 7 accounts. I have a bunch of them here on Thinkorswim, and I have a couple on Robinhood. John Birmingham, hello. Thanks for the dedication at teaching. Okay, you're welcome. I'm here every night. All right, I just started investing. And then went blank. I'm lost for words. Does the spread affect your covered call? Not necessarily so. Because, see, you get to a certain point in life, and I understand if you're not there yet, where money doesn't have as much of an impact as it used to when you were younger. I'll give you an example. He's talking about the spread, and you really can't tell what the spread is after hours because the spread changes when the day is, when the markets are open. But you got your bid and you got your ask. Normally, the difference between a bid and an ask on a decent stock, 24 million shares, yeah, it's going to be about 1 penny to 2 pennies max. That's going to be the spread. Is it really going to be that big a deal on the stock? Not really. It's going to be a bigger deal on the options because look at this, 120 to 131. That's an 11-cent difference. It's not just 11 cents. It's 11 cents per share. So for one contract, it's $11. Okay, now you may not think that's a lot, But for someone who does, 3 to 4,000 trades a year, that does add up. But at this point in my life, I really don't bother with the pennies too much. Maybe I should, but I don't, because I have more other things to be concerned about. I would love to speak with you directly. Well, I'll tell you what, Relix, let's do this right here. Reply, here we go. Okay. My email is in the bio, top left of your screen. Go there, drop your phone number, and I will personally call you myself. Oh, the whole thing didn't get there. All right. Check out. We got that one. We got that one. We got that one. Sorry, I'm trying to go through all the screens at once. I got 7. Well, wait a minute. 1, 2, 3, 4, 5, 6, 7. 7 cameras in front of me with questions, and I got 1 camera down below, which goes to the broadcast studio, which pushes it out to another 5 or 6 different platforms. So I tried to read all the questions at once. If I don't get to your question right away, I tried to answer every single question before the night's over. So we got another hour and a half or 2 hours, whatever, to answer all these questions. That's better. Thanks. Hello. You write any stocks today? Yes, I did. I forget what it was. Mellow King, how you doing? Chad. Yes, the legend. All right. What's your thoughts on Keel? Now, John, I'm going to be 100% honest with you. I'm a Gen Xer, so if I see a piece of crap, I'm going to call you out on it, brother. Okay, I'm looking for companies, John, that are consistently profitable and have weekly options. I have 2 criteria and only 2. Consistently profitable and weekly option. That's it. There's only about 350 different companies that fit that. Weekly options and consistently profitable. Okay, Relix, the reason for 3 accounts is because I don't trust the government. Okay, so sit tight. Keel. Keel. Hell no. That was quick. Didn't even look at anything. The reason I'm saying no, John, is I don't do monthly options. Okay, May, June, August, November, January. Those are months of the year. So there's 2 different types of stock options. Call options, put options. But there are 2 categories. Weekly options, which trade 52 times a year. Monthly options, which trade 12 times a year. So if I'm averaging 1 to 2% for each trade that I do, simply, safely, and predictably, I want to do 52, because 52% is a hell of a lot better than 12%. Granted, I'm retired, so you'd think I would rather do less, but no, 5 or 10 minutes a day works perfectly fine for me. Okay, Doug Fryer, how you doing? Good day, mate. Just started investing. Mellow King, glad to have you here. Does it spread? Nope. I love to speak to you directly. Got that one. Mellow King, you doing James's strategy? Thank you. How do I put money in it? OD, I can't really help you out with that one. I can't tell you to send me, Mike. It's got nothing to do with me. You've got to decide. Once you decide this is for you, I would suggest watching more people trade. And then I wrote a book about 16, 17 years ago, choosing the right trading platform. Because eventually you have to choose where you want to do this. It's kind of like if I want to go get a gallon of milk, do I want to go to Circle K? Do I want to go to 7-Eleven? Do I want to go to Quickie Mart? Do I want to go to Walmart? Where do I want to go? It's the same product, but where do I want to buy it? It's the same thing with Ford. If I want to buy Ford, great. Do I want to buy it on Robinhood, Acorn, Webull, Just a Trade, Think or Swim, Charles Schwab, or whatever? You have to decide where you want to do business. It's as simple as that. Do you want to do Charles Schwab? Great. Do you want to do E-Trade? Well, fine. Do you want to do Just a Trade? Great. Webull? There's so many different trading platforms. Once you see it over and over and over again, okay, then decide where do you want to do your shopping. Because it's kind of like a store. You walk into the store, you see dry goods on the left, produce in the center, meats and veggies on the right, and in the back corner we got our frozen drinks. Same thing in the stock market. You got your consumer goods, you got your energy products, you got your hard goods, you got your. It's separated by what it is you're looking for. Me, I'm looking for a consistent 1% every week. So I look for the cream of the crop, the best of the best, the companies that are consistently profitable year after year after year after year. That's what I'm looking for. Mellow King, cool beans. Alexander, how you doing, brother? FX Nicholas Trader, gold, buy now, toilet paper and SL. What is SL? Toilet paper and sloppy leftovers. I have no idea what that means. But I don't like when people do that. So I'm going to have to block and mute. I hate doing that. I do. Why can't you just come and enjoy? Relix. So can I contact you on any of them? I just sent you an email. Not an email. I just sent you a text. So reply to that top left-hand corner. Go right to my email and come right to me. Roxanne. Woohoo! All right. So Roxanne, hello. TikTok Tommy wants to take a look at Pfizer. It took me about 100 people to say hello to just to get to someone who wants to take a look at something. Pfizer. Okay, PFE. PFE. Pfizer. No. Whoa. Not no as in no. No is it not this week. Okay. Now I like Pfizer, I do, but not this week. Now I didn't even look at anything and I knew it was not this week. Why? Because once you take a look at a chart, once you know what it is you're looking for, you'll be able to find it in 1, 2, 3 seconds. Don't believe me? Let's take a look. You ready? High, low, where was it? Where is it? Up, down. That's it. I can take a quick look. High, low, right there. This is what my concern is. The top is here. She dropped down. This is what I'm looking at. Let's zoom in and I'll show you a little bit clearer. TikTok Tommy. You ready? 30-day high right here. 30-day bottom right there. Friday. Today, 1 day up. Great. I love 1 day up. But for me, I want 2 days up. On the third day, I will jump in. So although today looks good, I want Tuesday to be higher and Wednesday to be higher. And if Wednesday is higher, the third day, I will jump in on Wednesday. But just in case, let's take a look what the numbers look like. Because I like Pfizer. I do. So let's get rid of this. Let's change this to covered calls because it's a simple, safe strategy. The current price, $25.81. The closest strike price is going to be the 26s right there. So let's do one at 26. Right there, 26. Here we go. One contract. Now, the reason I'm doing one contract is so you get a good idea what one looks like. And then you can take a look at your account and say, if one's going to cost this much, I can get 4. I can get 12. I can get 32. You know what you have in your account. We're all on a different path. We're all on a different journey. This is just a minor pit stop on your way to greatness, hopefully. Okay, so by one covered call, Pfizer, PFE, 15 May 26, that's this coming Friday. That means this option is going to expire 3:59 p.m. Friday afternoon. Because at 4 o'clock, ding, 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 market's closed, you're out of luck. The $26 call option. Okay, the stock's currently at $25.81. 26 is not that far away. Profit, $42. Investment, $2,500. Think of it as a gumball machine. A gumball machine costs you about $2,500. Okay, a good one. So this week you have it outside Walmart. You're making $42. Next week you put it outside of Subway. Who knows what you're going to make? The week after that, you can put it outside somewhere else. And then you move it, and you move it, and you move it. And you keep getting money. BTBD. I have no idea what that is. I'll take a look at that in a minute. Okay? So I'm not ignoring you guys. I'm just trying to, one at a time. Okay? I'm going to get to those. Hold up. So the amount of money you paid, my rules are very simple. Okay? Okay, you already know it had to be simple, safe, predictable, consistent, 1% per week. You already know that. Fine. So you get the 5 rules. Rule 1, never buy something you don't understand or you don't want to hold on to. If you don't want to buy it and hold it for the rest of your life, don't buy it. If you don't understand it, don't buy it. Simple. If you don't understand it, don't buy it. You don't want to hold it, don't buy it. That's simple. Rule 1. Rule number 2 is even easier. Because if you paid attention to rule 1, rule number 2 is irrelevant. Rule number 2, never sell for a loss. So this money right here that I'm putting in, $25.58, I will never, ever, 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 I can keep going, but never sell it for less than I paid for it. Okay? But if someone's willing to offer me more than what I paid, yeah, I'll take it. Because I'm here to make money. I'm not here to buy and hold anything. Okay? So, that being said, rule 3. Now, this one boggles my mind because it's so simple that people disregard it. And it boggles my mind. Think about it. Rule 3. Make sure the company is consistently profitable. That means they're either making money or they're not. And it's easy to see, especially with dividends. And one of the reasons why I like dividend stocks, because dividend stocks share their profits. Great, I like that. And as the company makes more money, guess what? The dividends increase. If the company makes less money, guess what? The dividends decrease. So, is the company consistently profitable? Rule number 3. Rule number 4 is easy also, weekly options only. And rule 5, make sure the numbers work. We've already done that. What am I buying it for? What am I selling? Am I profitable at least 1%? The trade right here tells me, what am I paying? What is my rate of return? Not my rate, sorry. What am I paying? What is my profit? Now, do I care if the stock goes up? No. I'm buying it at 25, what the hell is it? 25.78. I'm selling the 26s. Okay, great. I get the difference between the purchase price, 25.78, and the 26. So it's an additional 22 cents. Big deal. But what I'm looking for is this right there. Because that right there is my profit just on the stock option, not the stock. Okay, now this option is going to expire this coming Friday. So either the person who bought it takes the stock away from me, I walk away with my profit, or they don't. I walk away with my profit and I walk away with the stock. Crazy, isn't it? All right, so calculator, if we will. Profit 42. Okay, max profit 42. And then we divide it by the investment. Cost of the trade, including commissions and fees. The whole thing, whole kit and caboodle. 25.58. Okay, 25.58 has a grand total of 1.6. 1.6 for 4 days. That's it. 1.6 for 4 days. All right, so we're going to save this one because 1.6 makes sense to me. $1.6. 1 is the loneliest number that you'll ever do. 2 can be as bad as 1. It's the loneliest number since the number 1. All right, here we go. Are you ready? Are you ready for this? One covered call, Pfizer, PFE, 15 May 26. That's this coming Friday. The $26 call option. Here's the profit, 42. Here's the investment, 25.58. It either makes sense or it doesn't. You either like the company or you don't. You don't like it, don't buy it. You don't want to own it, you don't want to hand it down to your children, don't buy it. Simple. Okay? All right, so 1.6%. Let's save that one. Right there. You can't get there from here. All right, here we go. That's 2. We got 3 more to go. 3 more. We do 5 every night. I find 5 decent companies that make it look good. Oh, Mikey wants to take a look at Altria. We're going to get to that in a minute. Okay? So, Tom, I hope that worked. JIT.
What was the first one, James? Sorry about that.
I don't know.
What was the first one?
I don't know. I don't know either. But when I open it back up again, I'll let you know.
Next time.
Yeah, when I open it up again, I'll let you know.
Great minds think alike.
Yes, right. That's right. You know what? Einstein was once asked, how many feet are in a mile? Some student says, Einstein, how many feet are in a mile? Einstein says, my dear boy, why would I clutter up my mind with something that's written down somewhere?
Good point.
I mean, they say the brain can absorb a lot of information. That didn't go down right. Whoa. All right. What do we have next? Jit wants to take a look at APH. Never heard of it. APH. Let's take a look. APH. Amphenol Corporation. No. Sorry. Number one, it's dropping like a rock. Number two, it's a monthly. I don't do monthlies because the numbers just don't work in my favor. That's it. Relix, thank you for that. All the way from Australia. Good day, mate. Crypto tracker. Is 1% 2-3 times a week reasonable? Yeah, it is. Because actually, you know what? They recently introduced stocks, or what do you call it? Tri-weeklies that does it 3 times a week. So I'm looking into that and see if I can come up with some type of trading strategy to do with those. They're a little bit more risky, but I'm thinking about, putting something together for those. Send me a text to Odie. All right, here we come, Odie. Uh-oh. No. What's happened there? I'm trying, Odie. It's not allowing me to send something back to you. Why not? Why is it not letting me reply to Odie? There we go. To find my email address, top left-hand corner of your screen, just click on that, send me a link. All right, where were we? Alrighty. ASTS, Saint Checkmax? Okay, ASTS, never heard of it. ASTS, Ast Space Mobile. Ast Space Mobile? Never heard of it. Here's the high, here's the low, here's where it was, here's where it is. Look at this. Up, down, up. What's going on right there? 85.55. 82.55. Oh, hell no. This thing dropped after hours. Who came up with this one? Okay, St. Checkmax. Whatever. Okay? The last trade today was 82.55. After hours, we're down to 72. So it dropped another $10 after hours. So we're going to say no to this one until she's ready to stop dropping. All right, send me a text to Larry. Larry, can we try CVS? Of course we can. I love CVS. It's on my list. Not today. See that, Larry? I didn't even take a look. Look at that right there. Larry, I don't buy anything at the high. It's the high of the year. What are you expecting this thing to do? Seriously. Okay? Now, don't get me wrong. I like CVS. But buy low, sell high. Not buy high and wait for it to go higher. It doesn't work for me. Okay? Sorry about that, Larry. So what do we have down here? All right. Okay, let's keep on going. All right, well, Silver Mine, got that one. Golden Shepherd, do you trade gold? No, we did that one. McCronin, okay, hello. Calm, good evening, nice to see you back again. Kissable wants to take a look at Dow. I do have me some Dow. I do. All right, so let's take a look at Dow and see if you like it too. Here's the high. Here's the low. Here's where it was. Here's where it is. She dropped, went sideways for a bit, shot up and back down. Okay, here's where we are now. What's going on? Dow's been around for over 100 years, so it has the longevity to it. And here we go. Last 30 days, we'll look at the 11th. There we go, right there. Okay, interesting. Let's take a good look at it. 30-day high, 30-day low. Where was it 30 days ago? Where is it today? She went up, down, down. Now she's going back up again. 38.76. I'd be looking at the 39s, and that's paying over 2%. Let's take a look at Dow. Why not? It's over 100 years old. You either like it or you don't. How you doing, brother? I can't read that name, but hello. All right, let's keep on going. All right, so let's get out of this. Let's go to the covered call again. And we're looking at the 39s. And here's the 39 right here. Open up. Now, if you can't see it on your phone or your iPad or whatever you're looking at, the screen here is live on YouTube. Okay, so you can go to YouTube and look. You know what? I'll help you out. Watch this. Go to YouTube. YouTube. There we go. Here we go, right there. See? That one's live, and this one is live. Hey, there I am right there. Okay? Live and live. The screen just by itself without me there, and there's me in front. Hey, look at this, me drawing. I'm actually drawing on this, and it's watching me draw. Isn't that funny? Anyway, so it is live on YouTube if you want to see the numbers a little closer. So let's get out of that. Back to where we were. All right. Dow. Okay, so let's do one contract on Dow. Drop it down one more. There we go. Now, here's what the numbers look like. Here's what they sound like. To make sure you do it correctly, always read it out loud so you can hear it to make sure you're doing it right. By one covered call, Dow, D-O-W. 15 May 26. That's this coming Friday, 4 days away. The $39 call option means I'm selling it at 39. I'm buying it at 38.76, hypothetically speaking, because tomorrow morning the numbers might change, but the math and the process is the exact same. What am I buying? What am I selling? Am I making 1% or more? Great. So, one covered call, 15 May, the 39 call option, maximum profit 106, cost of the trade including commissions and fees 3,700. What does the calculator tell me the rate of return is? 106 is the profit. There we go. We divide it by the cost of the trade, including commissions and fees, $37.94, $3,800 for one contract. I'll just go 3,800 to make it easier. Whoops. Try it one more time. 37.94 comes to a grand total of 2.79. 2.7, whatever. 2.79%. I'm going to save this one. I like Dow. I actually have some. All right, let's get rid of this while we're waiting. 2.79. Oh, come on. Come on, come on, come on. Now touch me, baby. Can't you see that I am not afraid? There we go, Dow. Dow, by one covered call, Dow, D-O-W. 15 May 26. That means it's 4 days away. $39 call option. Look, it started at $38.65. So I'm going to sell the 39s. Okay. 106 is the profit. 37.94 is the investment for, what was it again? 1.6? 2.79. Ugh. 2.8. All right, 2.8. That works. 2.8. Peabody Energy. That's number one. Peabody Energy, BTU. All right, back to where we were. Next. Ooh, Kit wants to take a look at 3M. It don't look that good. Okay, first thing I want to take a look at. The top, the bottom, where was it, where is it? Look at this. It don't look good. So we're going to say no to 3M this week. Don't get me wrong, I like 3M, I do. Here's the high, here's the bottom. She tried to go back up, didn't quite make it, but she's still progressing downward. So no. EV chargers. How you doing, EV chargers? Nice to see you. All right, now we're going over to channel. Oh, let's take a look at this down here. Well, hold on. VQ96. Hey, James, first time stopping by your live. Can you give a good rundown on when Should a person buy in on a bullish movement and when to exit? Your own opinion always seem to lose the point. Okay. Okay, Jit, sit tight. Sony's going to be a no because it's a monthly, it's not a weekly. I know that right off the top of my head. We're going to take a look at 3M in a minute. Hold tight. So to answer your question, the stock market's been around for over 400 years. It's not going anywhere. There's always a trade somewhere to do something. It's always going to depend on what it is you want to do. What are you looking to do? Me personally, I'm looking for a 1% per week, simply, safely, predictably, consistently. Got a trading strategy created for my 9-year-old daughter. Very simple. So you get to decide, what do you want to do with your adventure in the trading realm? Okay, you want to retire in a week or two? Okay, fine. You can do that. It can be a little challenging, but you can do almost anything. Let's get the chair here, get a little comfortable, and read some of these questions. We got another hour to go, so we got plenty of time. All right, let's check this out. Calm VQ96, adapting his strategy, getting 2 weeks before the EX date. Okay, date Monday, blah blah blah. Weeks out. Okay, cool. Nicely put. I like the way he did. Calm, get nice job. Adapting his strategy, get in 2 weeks before the EX date on a Monday. The dividend week out before the dividend pays. Okay, that sounds about right. Kissable, James, did you look up, down? Yeah, we looked at Dow already. This is the lowest IQ I've ever seen. Compounded nuts. Cool beans. So if it's the lowest IQ thing you've ever seen, then maybe you should be able to do it too. Maybe. I'll give you the benefit of the doubt. Thank you, Com. Any good books or materials to suggest? I would suggest, it's a very simple read. It's called The Wall Street Money Machine by Wade Cook. Ocho, Ford and FCX for the data center hype and FCX for the China play. Okay, let's take a look. All right. Ford. Wait a minute. Yeah, Ford. We already looked at 3M. That was a no. Now, I like Ford, but I don't like what happened today. Okay, 30-day high. She drops and she bounces up. But today, she pulled back. She was at 1140, jumped up to 1240. That's your issue right there. From 1140 bottom to 1240 here. That's a 20% increase. So today, profit taking. No to Ford for this week. Oscar's house. What's happening? FCX. Interesting. Going to have a minor issue with this, but let's take a gander at it just for the fun of it. Okay, FCX. The high, the low. Where was it? Where is it? What's the motion? Sideways, up, down, up, down, up. Okay, right there. What's going on? Last 30 days. Last 30 days gives me a good idea of where it's going to go next. Is it guaranteed? No. Okay, J.R. Ewing, AGNC? No. I'll look at it for you and I'll tell you why I'm saying no to AGNC, but sit tight. 30 days. Okay, FCX. Top, bottom, is up, down, up. Great. Wonderful. 55 to 65. That's $10. That's a 20% jump. From here to here, 20%. And it's got a gap right there. Gaps have a tendency to fill. So you know what it means? It means this baby's going to come down and fill that gap. Also, it was here a week ago, last week, and it just jumped up 20%. So ask yourself the question, and don't lie to yourself, because you're only hurting yourself by lying to yourself. If you bought at the bottom here, because remember, buy low, sell high. Well, the last 30-day bottom was right there. Okay, it jumped up 20%. If you bought something that jumped up 20%, would you keep it or would you take your profits? It's a simple question. Would you take your profits or would you keep it? Term. Okay, hold on. I'm going to show you AGNC, and I'll tell you why I don't like it. All right. It's got, all right. sell, wait for it to drop. That's not what I said. I said I would never buy it, and here's the reason why I won't buy it. It's got nothing to do with the chart. Nothing at all. Rule number 5 is make sure all the numbers work. Well, the numbers are very simple. What am I buying it for? 1080, 1080, 1080, 1080. It's currently at 1080. The closest strike price is going to be the 11. The 11 is going for 2 cents. Why would I buy something to collect 2 cents on a $10 stock? No. And if it goes down, one strike out of the money, 0, 0, 0, 0, 0. The premiums are horrible. There's a few companies that the premiums are so horrible, I refuse to do them. It may be a great company, but if I'm not making money, if the numbers don't work, rule number 5, make sure all the numbers work. What am I buying? What am I selling? Is that 1% or not? It's a no. It's not 1%. No, thank you. That's just my opinion. I have been wrong before. All right, Daniel, what's good, anyone? Happy Monday. Cool, how you doing, Daniel? Scotty, what do you think of buying Intel at its current price? Well, let's take a gander at Intel. I like Intel. Hold on, I got to prove that I'm human over here. One of those slidey puzzles. So you want to take a look at Intel at the current price. Okay. INTC. Intel? Hell no. Wasn't that quick? No. I don't buy at the high, and that's just freaking crazy. A couple of months ago, we're at $40. Now we're at $129. Yeah, no. And take a look what happened today. Okay? Now, she's dropping. That's what it's supposed to do. Goes up, then it's going to drop. Did you like that, JR? J.R. Ewing. Who played? Was that Patrick Duffy who played J.R. Ewing? Well, maybe. Microchip company. Is it good to invest in a microchip company? I don't know. Because it's always going to, for me, it's always going to be about the numbers. Does it make sense for me to buy it? Does it have a good future? Does it have a decent past? Have they consistently been profitable for at least 2 decades? It's my actual initials. Cool beans. Antonio wants to take a look at Wally World. Now, I do have some Wally World. I do. Let's take a gander at Wally World. Something you might want to think about. Here's the high. Here's the low. Here's where it was. Here's where it is. Look at this. Up, down, up, down. Don't look that good this week. Your last 30 days. Here's your 30-day bottom. 30 days ago, 30-day top was on Friday. Now she's dropping. Stocks do 2 things. They go up and they go down. That's it. They go up, they go down. That's it. Don't expect them to come to the house, take the dog for a walk. It doesn't work that way. Taiwan Semiconductors, we'll get that in a second. So Walmart, even though I like it, okay, 30 days ago was the bottom. Last week was the top. Now she's coming back down again. So, no. All right. Now, let's go all the way back to the beginning to see who's on channel number 1. Okay, so I got 7 cameras in front of me. 1, 2, 3, 4, 5, 6, 7. And then down bottom, it goes right to the broadcast software. So this camera down here, that goes to like 5 other websites. Shania wants to take a look at Shop, which is Shopify, which is going to be a no only because Shopify doesn't have 20 years of profits. Now, you can put your money anywhere you want. You might think Shopify is great for you, and it might be. It really might be. But you got to remember where I'm coming from. I'm 62. I'm retired. So I don't have the luxury of making mistakes. So although I'm looking for just 1% a week, which is very minimal, I do it because it's simple, it's safe, it's predictable, and it's consistent. Okay? 1% a week comes to 50% by the end of the year. KJ, UNH. I heard some bad news about UNH the other day. I wasn't quite sure what it was, but we'll take a look at it in a minute. Okay, KJ? UNH, University of New Hampshire. So Shania, sorry about that. But Shopify, it may be great. Okay, I can't really tell by your picture, but you don't look like you have any gray hair, so don't look like you're retired. So it might be good for you. 10 to 15 years from now, it might be worth a heck of a lot more. But I'm not investing for future growth. I'm investing for weekly cash flow. And there's a huge difference. There are many people out there that probably be a better fit for you if you're looking to put into something for future growth. It's not what I'm looking for, so it's not going to help out. All right, so who do we have on camera number one? Alex, tell him what he's won. Okay, we have Cheer Me Up, Oscar's House, Dudley Thomas, Rodolfo, Missing Virginia. Okay, The Truth Thing. Okay, already. Do you do anything with the airlines in the light of spirit? Okay, Junior. I'm going to call you Junior. No. Okay, I don't look at things that way. I look at, okay, hold on. Because some of you guys are new here, you don't quite understand what exactly I'm doing. So let's back it up a little bit and give you a rough idea. Okay? Now, when I say I only like companies that are consistently profitable, the good thing for you guys is someone other than me keeps track of them. Believe it or not, there's a whole bunch of people that keep track of good quality companies. So the cream of the crop, they're called dividend kings. Okay, dividend kings. 5 decades. Now, 5 decades is 10, 20, 30, 40, 50 years or more of consistently increasing their profits year after year after year after year. I didn't come up with the name. I didn't come up with the list. Someone else did. I just take a look at the list and say, hey, these are good companies. Okay. List number 2, dividend aristocrats. 25 years of increased profits. Dividend champions, list number 3. 25 years increased profits. The difference between the two is the aristocrats have a little bit more rules and a little bit less ruffians that they let in. Okay. List number 4, dividend contenders. They have increased their profits for 10 to 24 years, consistently increasing their profits. And just for the fun of it, list number 5, we're going to throw in Warren Buffett's list because, hey, it's Warren. Let's peek over his shoulder, see what he's doing. So those 5 lists right there will give you 350 different companies to look at. Now, I check every week. As a matter of fact, let's check right here, right now, so you guys can see for yourselves. Okay, first thing I want to do to go to FinViz. FinViz, Financial Visualizations, not my website, it's someone else's. What am I looking for here? Specifically the screener. Because the screener allows me to take a look at the exchange, market cap, earnings date, price, target price, volume, blah, 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 blah. It's not what I'm looking for. What I'm looking for is this number over here. How many stocks in the stock market as of today? Weird number. Weird as hell. It's so weird. I got to write it down. Hold on. Watch this. Are you ready? The number's right there. 11,111. That's it. Every week, they add more companies. And every week, that number changes. Last week, it was 11,040. 11,040. So this over the weekend, the past weekend, over the weekend, they added another 60 companies. Whatever. So we're at 11,111 different companies that you can invest in. You can pick any one of them, and the list is right here. Okay, A, Allegiant, AA, Alcoa, AAA, Alternative Access First Priority CLO Bond ETF. Okay, AAAA, Applius Aggressive Asset Allocation ETF, blah, 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 blah. There are literally a whole bunch that you can invest in. And here you can find out information. You can go stock price. Where's the price? Right here. You go by price, the dividend, the average volume, the relative volume, the float, the sector, the IPO date, the industry, outstanding shares, options, float, blah, blah, blah. A lot of information you can look. And look how many pages we got. Okay, so we have 556 pages of companies. I look once a week to see how many new companies did they add. So this week, 11,111. That's an easy number to remember. But next week, it's going to be a different number. All right, let's keep on going. Next, all right, let's get out of this. We don't need this anymore. All right, we got some noise in the background over there. Okay, so back to here. Remember, there's over 11,000 different companies. So why is it I'm only looking at 350? Well, once I find out my 350 companies, I take them and I stick them into the calendar. Because the interesting thing about dividend stocks is they pay a dividend every 90 days. Every 90 days. Okay, that's 3 months. So we have 4 quarters for the year. 365 days, 266 trading days. No trading on holidays and no trading on weekends. 266 days, roughly. So, January, February, March, first quarter. April, May, June, second quarter. July, August, September, third quarter. October, November, December, fourth quarter. The first quarter looks the exact same as the second quarter, which looks the exact same as the third. It's every 13 weeks. Okay? So I take all the stocks that I like, I put them into the calendar, and the calendar tells me what to look at and when. Because I want to look at just before the dividend is paid, because stocks have a tendency to go up in value. So what do we have here? Dover, Sherwin-Williams, Smuckers, ExxonMobil, Emerson Electric, Walmart, IBM, Target, Consolidated Edison, Aflac, Archer Daniel, Midland, Lennar, so on and so forth. All of these companies here, all these green dots, are companies that have increased their dividends for 25 years or more. Okay, Johnson & Johnson, right here, you heard of them. Expedia, you probably heard of them. Aflac, you probably heard of them. Target, I know you've heard of Target. I know you've heard of ExxonMobil, IBM, Walmart. Those are the stocks that I'm looking at. So I put them into the calendar. What's today's date? The 11th. Great. So I'm looking at these companies for this week. Next week, it's these companies. The week after, these companies. But here's the thing. It's not my only list. Okay, I come over here, personal list, right there. Here's all my lists. And they're all looking at something in particular. All dividend stocks under $10. All stocks that have weekly options. Uh-oh, low battery. That's not good. Got a low battery. Low battery. There's nobody even in this table. On this. All right. There we go. All right. So I take a look at the stocks. Dividend Kings, Dividend Aristocrats, Dividend Champions, Dividend Contenders, Warren Buffett's list. Take them and I import them into the calendar and it tells me what stocks are paying when. Then I take a look. Is it high? Is it low? What direction is it going? All right, so let's go back over to here. What other questions do we have? Oscar's house. Kelly, how you doing, Kelly? Micus. Joel, call me Pooh. Yes, disturbing as hell, dude. Mike, car's supposed to come back tomorrow. My Tribe, how you doing, My Tribe? MTB. Logan, how's it going, Logan? HSA. Roxanne wants to take a look at PLTR. I liked you there for a minute there, Roxanne. Not anymore. Let me show you why I don't like PLTR. PLTR. Okay, Roxanne, check this out. Palantir Technologies, PLTR, $136. Okay, has no dividends. So if it has no, Bobby, how you doing? If it has no dividends, how do I know when the right time to buy is? Because a dividend stock is predictable. Just before the dividend is paid, the stock goes up in value and they share their profits. I love dividend stocks. They share their profits and the stock is predictable. Just before the dividend, the stock goes up. I can't tell that with Palantir. And then how do I find out whether or not they're profitable? Well, now I'm reading quarterly reports and annual reports. I don't want to do that. Okay, so let's go. Can't do that one. Can't do that one. Statistics. All right, let's look at statistics for Palantir. Okay, so here's their market cap. 200, 320, 430, 425. It's dropping, it's dropping, it's dropping. That's not good. Okay, it's increasing. Now it's decreasing. Not good at all. Hold on. Let's keep on. Price book. Okay. Revenue. Where is the revenue? Here we go. Oh. This is not good, Roxanne. Did you see this number? Revenue per share. How much money do they have coming in directly related to how many shares they have? So for a $135 stock, it's bringing in roughly $2.19 per share. It's not a whole hell of a lot. Let's slide all the way down. Now we're going to do something that's called book value. Now, I don't know if you understand what book value is, Roxanne, but a book value, think of it as a fire sale or a yard sale, clearance sale, estate sale, selling anything and everything. Okay? So you take a look at everything Palantir owns. If the Supreme Court comes up and calls up the CEO, yo, you got to divest and give all your investors their money back. Guess what you're getting? You are getting the book value after they sell off everything. I'm seeing everything, the pens, the paper, the trash cans, the broken chairs, everything. You're getting a whopping $3.09 per share. $3.09 per share. That's all the company's worth. $3.09 per share. If you have to liquidate everything, you get $3.09. Let me show you this one. This company's been in business for over 100 years. General Motors. Let's take a look. It's just comparing numbers, strictly the numbers. Okay, come down to here. Revenue per share. The stock is $75. $75 for the stock. Look at the revenue. $197 per share. So for each share General Motors has, it brings in $197 for each share they have. Palantir doesn't. Okay, what is the book value? The book value per share is $68.78. The stock is only $75. So if I pay $75 for the stock and the Supreme Court says, hey, give them the money back, I'm getting $68. You're getting $3. Huge difference. It's not the hype that you're looking at. You're looking at hype and you're buying a hype. You're not buying by the numbers. What is the company actually really worth? And General Motors at least has dividends. At least I'm getting paid when. And it's not an if the stock goes down. It's when the stocks go down. Because stocks do two things and only two things. They go up, they go down, that's it. And they don't go up forever. Because they go up, once they go up a certain percentage, people jump out and take their profits. It's that simple. Like that, Bobby? How you doing? Oh, Cincinnati wants to take a look at Kohl's. All right, let's take a look at Kohl's. KSS. I don't mean to pick on you, Roxanne, but I don't want to disillusion you either. Okay, you think Palantir is good? Well, hey, if it's working for you, great. I don't ever tell people what to buy, what not to buy. If you like Palantir and you think it's going to work for you, great, you do it. You're asking my opinion. That's my opinion. I don't like it because they don't have dividends. That's number one. Number two, the book value is not as good as I want it to be, and the revenue coming in is horrible. Just my opinion. Anyway, Coles, the high, the low. Where was it? Where is it? Up, down, up, down. It's a definite no for this time. But Cincinnati, take a look at this. Look at the last 30 days. Thank you. I'm just learning. This is class for me. I'm here every night. I'm here Sunday, Monday, Tuesday, Wednesday, Thursday. I take Friday nights off and Saturday nights off. Ask whatever question you want. Alexander, SU. Alexander, sit tight for a second. We'll take a look at Coles. Yeah, I get it. I see it. Sit tight, Alexander. Who asked about Coles? Cincinnati. All right, Cincinnati, check this out. Now, I'm saying no to Coles for this week, but take a look. Here's the bottom, okay? Not the bottom of the 30-day period, because that's way over here a month ago. She went up, now she's down. So once she finds its new bottom and turns around, goes back up, that's what I want to look at. As a matter of fact, I'm going to write Coles down for next week because I want to catch that bounce. Okay, you hear it over and over and over and over again. You want to make money in the stock market, you buy low and you sell high. Well, here's the low here, but in my opinion, it's not time to buy yet because I want it to bounce off that bottom and go back up. So I want to look tomorrow. Is tomorrow going to be lower or higher? And then I want 2 days to the upside. So 1, 2, and then on the third day up, I will jump in on the third day. Okay. So no to Coles for this week. Sorry. So Alexander wants to take a look at SU. What is SU, Alexander? Suncor. Ooh, maybe. Maybe. Now, normally I don't buy at the high, but here's the thing. She jumped up. Right. She doubled in price since January. Since a year ago. So a year ago, we're here at 35. And then last week, we hit 70. That is a 100% increase. So why am I okay with it? Because you have your pullback right there. Now she's bouncing up off that pullback. That's what I want to see. So let's zoom in a little closer. 30 days, 30 days. 30 days, here we go. 30 days. 30-day high, 30-day low. Where was it 30 days ago? Where is it now? She dropped, 30-day bottom. She shot up, 30-day high. Profit taking. 1 day up, 2 days up. If this thing is higher tomorrow, I will be jumping in. If the numbers work. Because remember, just because the chart looks good, what do the numbers look like? Well, it's 65.12. The closest one's going to be the 65. It's paying 105, which is over 1.5%. Okay, let's check it out. All right, so let's get rid of this. Back to covered calls. Because they're simple, safe, and predictable. We're looking at the 65s, which is right there. Okay, one contract. Here we go. And here's Johnny. Johnny, tell him what he's won. Whoa, Bill, we got Suncor. Is it Suncor? Yes, Suncor. 15 May, which is this coming Friday. The $65 call option, $103 is the profit. What's behind door number 2? 6,397. Well, what's the rate of return? All right, 103 is the profit. Divided by the cost of the trade, including commissions and fees, 6,397. 6,397 comes to a grand total of 1.6% for 4 days. Remember, you got to change your way of thinking because we're not investing for annual returns anymore. We're investing for weekly returns. It's a whole new conversation. It's a whole new way of looking at things. You got to squeeze out 5 or 10 minutes out of your day. Okay, stop spending so much time planning a family barbecue. Look at your personal finances, 5 to 10 minutes a day. Here's the thing. You got cats, dogs, fish, birds. You pay attention to them. You feed them, you water them, you walk them, you clean up after them. What are they giving you? They're not financially setting you up for your retirement. Because when you get retired, I'm retired. When you get here, you got two choices, and only two. And don't let anybody think you got more than two. I grew up in the 60s when you had two choices, chocolate or vanilla. I remember when they came out with strawberry. It was wonderful. But needless to say, like this, okay. Is that the right one? No, that's the wrong one. All right, this one. There we go. Okay, so 1.6%, if it makes sense to you. You either like the company or you don't like the company. It either makes sense or it doesn't. It's a simple strategy created for a 9-year-old little girl. And you know what? We haven't seen her in a while, so let's bring her on down. Come on down. Here it is right here. Why? Oh, YouTube. Here we go. Ubity tubity. All right. Videos. The oldest videos. And here she is, the princess herself. Yay! Turn this one off.
Being part of that, you're going to be getting weekly lists of stocks that I'll be trading. And
why can't they stay little? She's taller than me now.
You can choose from that.
That's when she's 11. All right, here's my favorite part. Hold on. That's me. 18 years ago. Look at all that hair I have. Holy cow. Wait a minute, here comes my favorite part. Here it comes, here it comes. Okay, the reason I show you that is, yes, my daughter was 9 years old and she wanted to learn how to do this. That's the picture when she was 11, 2 years later. Okay, and that's made quite a while ago. Believe it or not, I still have this shirt. I do. I still have that shirt. It's got more holes in it now because it's like 18 years old, but I still have it. All right, so what am I trying to say? So I've been doing this for a while. My main concern was to make sure that she didn't lose any money. Simple, safe, predictable, consistent, no way for her to lose. The strategy was easy. Never buy something you don't want to own. Never sell at a loss. Make sure the company's consistently profitable. Weekly options only, and then make sure the numbers work. One of the safest strategies is a covered call. Why are you looking at the 65? All right, Tony, I'm not quite. Oh, you're talking about a stock. Okay. Well, because the 65 was the closest strike price. I don't remember what it was, what we're talking about, but the reason I pick what I pick is because it's the closest to the strike price, to the stock price that I'm buying. So if I'm buying it at 64.80, I'm going to be selling at 65s. If I'm buying it at 65.15, I'm going to be selling it at 65. If I buy it at 65.23, I'm going to be selling the 65s. You got it? That makes sense, right? All right. Jay Garner wants to take a look at CARE. C-A-R. I have no idea what that is, but let's take a gander. Let's get out of that. Oh, so anyway, that's my 9-year-old daughter. Well, when she was 9, 18 years ago. She's not 9 anymore. Yeah, baby. How you doing? Okay, so let's get out of this. We don't need that anymore. We don't need this anymore. Alrighty. Thank you, Tone. Tone Rivera. All right, so we don't need this. Let's get rid of that. Let's get oops, nope, let's get out of that. Let's get out of this. Wait a second. Whoa, whoa. What was the rate of return there? Yeah, 1.6. I want to save that one. Oh, I almost missed that one, didn't I? 1.6. Suncor. I forget who came up with this one. All right, now let's get rid of it. Get rid of that. Get this back to where we were. Back to the beginning. All right. Here we go. All right, so Suncor. Here we go. Tra-la-la. There it is. All right. One covered call. Suncor. SU. 15 May 26. That means this option is going to expire this coming Friday, which is only 4 days away. And the $65 call option. The reason why I'm looking at the 65s is because the current price was close to 65. Well, 103 is the profit, 63.97 is the investment. It's always going to be something you got to put in order to get some type of return. 1.6, fine. 1.6, I like 1.6. Uh-oh, that's number 4. That means we got one more to go. 1.6, yay! 1.6, the crowd goes wild. All right. Dividend coming up this month, cool beans. Phil, good evening, Mr. Phil, and how are you today? Mikey G is in the house. Holy cow, Mikey G, how you doing? All right, what else do we got? All right, KJ wants to take a look at University of New Hampshire, UNH. Actually, hell no, come on, KJ. What are you doing to me, brother? This is the high of the year. No, it's not. The high of the year was a year ago. Then she dropped. Then she shot up. Yeah, no, thank you. I don't buy at the high. You knew that though, right? Peter, how you doing there, Mr. Peter? Peter, pumpkin eater, had a wife and couldn't feed her. Put her in a pumpkin shell. There he kept her very well. Wow, I learned that back in elementary school. Yes, back in the 70s. 70s were a wonderful time. Carefree. It was really cool. All right, let's go back over here. What else do we got? All right, Nathan, time to delete. Jonathan, Michael, RJ, Bazjam, Float. Where do you get a name like Float? Ooh, Mellow King wants to take a look at Marvel. Sit tight, we're going to take a look at this. Okay, I spent a lot of time over here. Let me go over to the next channel and see what they got. TikTok star, Eric, Buble, Jamie Jams, Phil, MacArthur. Thanks for the message early today. You got it, Bobby. Bitcoin Bub. How's it going, Bitcoin Bub? BB Barnes, Miguel, Rebi, Real Talk, Oscar's House, Jonathan, James, Cam, Nam. Okay. Peter Bernardo, Boxing Asparagus. That can be taken 2 different ways. You can put asparagus into a box, or you put boxing gloves onto some asparagus and they're duking it out. One or the other. 5-star, Atari, DJ U2 Smooth. Okay, Bobby, we already looked at Intel. You're a little late to the party. Birthday Week, True Lies. Ooh, that was a cool movie. Chris, Dwayne. All right. Jaden, Bobby Jacobson, Hank, Ed, Nonstop Motion. All right. So, is this Hakuna Matata versus hoax? I'm not quite sure about that one. Uh-oh. Kevin wants to take a look at Cisco, SYY. Wait a minute, isn't SYY a monthly? I know it's Cisco. It is a monthly. Kevin, sorry, dude, I don't do monthlies. Okay, monthlies just don't work the same as weeklies. Think of it this way. There's 12 months in the year, which means I can trade it 12 times. Or MO, which is Altria, MO is a weekly, which I can trade it 52 times. Okay, I'm not looking to make a huge amount of money, Kevin. I'm looking to make 1% with each trade that I do. And 1% is so easy. It's child's play, literally. She was 9 years old when I created the strategy for her. Okay, my 9-year-old daughter says, Daddy, what are you doing? Can you teach me? I mean, think about it. She didn't want a bunny. She didn't want a guinea pig. She didn't want a new dress. She didn't want a new hairdo. She didn't want to get her nails done. She wanted to learn how to trade in the stock market. Okay. So, came up with a strategy. It seems we're, Wingnut is thrown in the hat, thrown down the gauntlet for KMB, Kimberly Clark. Yowza. Awesome company it is. Unfortunately, what's going on there? Now, it's not a bad thing, Wingnut. Let's zoom in and check it out. Last 30 days. Okay, not this week. Okay, 30 days ago, we're here. Drop, shut up, right there. Okay, so what I like about this, number one, it's Kimberly Clark. If you don't know who Kimberly Clark is, they have over 5 decades of consistently increasing their profits. So they give you more money every single year just for owning the stock. I like Kimberly-Clark because it's a dividend king. 5 decades of increased profits. Okay, so why I like this? Well, because I know the bottom is right here. Now it's coming towards the bottom. As soon as it finds the bottom, bounces up, that's when I want to jump in. That looks like it's going to be next week. So I'm going to put Kimberly-Clark on my list for next week. KMB, but not this week. Sorry. Kevin, Altria. Let's take a gander. MO, Altria. No. Reason being 30-day bottom, 30-day high. Blah, 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 blah. Now, I will put Altria on my list for next week and take a look at it next week, but not this week. It's already on my list for next week. Okay. All right, back over here. So, nonstop motion. It is Hakuna Matata. Hakuna Matata. What a wonderful phrase. Valley Estician. Okay. Josh. Calvera. Denny Rodriguez. Que pasa, amigo? Crow. Tyrese. Michael. Big App. What's happening, Big App? Penny. Hi, Penny. Chad. Ramiro Lopez. Layden. Zeus. Awesome Rob. Rob. I love that name. It's Awesome Rob. Hey, Awesome Rob's in the house. I like that name. It's a good one, Awesome Rob. Rupert. Kadza. Yo-Yo. Okay. Anthony B. Jordan. What's happening, Jordan? Duke. Project Beetle. Okay. TJ. So the strategy is to sell one covered call and hope the stock goes down to collect a premium. Nope, you weren't listening, TJ. Now, the only reason I say that, TJ, is because this is your first time here. It may not be your first time here, but this is the first time I'm reading something that you wrote. The strategy is basically simple. Never buy something you do not want to own. Go into it as if you're going to own it for the rest of your life. That's number one. Never buy something unless you want to own it. Now, when the premium comes in, let me find a good one. Alcoa is a good one. Is Alcoa good today? There it is, right there. Alcoa, good one. So you either like Alcoa or you don't. First off, Alcoa has over 5 decades. That's 10, 20, 30, 40, 50. 50 years of increased profits. Okay? Rule number 3, never buy a company that's not consistently profitable. Alcoa. Great. Here's the high of the year. Here's the bottom of the year. Here's where it was a year ago. Here's where we are now. We go from 25 up to 75. That, my friend, is a 200% increase. Not what I'm looking for because it doesn't do that every day. I'm looking for weekly cash flow, not annual returns. So, hit 75. Now she dropped. Now she's bouncing back. That's the area I want to take a look at because that's what's happening now. So you pick a good company, number one, okay? 30-day high, 30-day bottom. Now she's going up nicely. Look at this, 1, 2, 3, 4, 5. 5 days going up. That's 65.34. The 65 is going for 178. Now, you may or may not know this, but $1.78 is more than 1% of a $65 stock. 1% of a $65 stock is 65 cents. Is that funny? 1% of 65 is 65. Okay, 1% of $65 is 65 cents. So I'm looking for 65 cents on this, but yet market makers offer me $1.78. That's over 2%. And I'm okay with that because 1% every week is over 50% by the end of the year. 2% every week is over 100% by the end of the year. Okay, follow me so far? Rule 1, never buy something you do not want to own long term. Rule 2, never sell at a loss. So if I'm buying this at 65.34, never, ever, ever, ever will I sell it for less than when I just paid for it, 65.34. So I'm going to sell the 65s. Someone's going to pay me 178. So I'm actually going to walk away with 66.78, and that's more than that, which means I'm making a little profit if the stock stays above 65 by this coming Friday. Okay? Expiration date, 15 May. That's this Friday. 22 May, that's next Friday. 29 May, that's 2 Fridays away. 5 June, 3 Fridays away. 12 June, 4 Fridays away, so on and so forth. Weekly, every single week. I'm looking for 1%. 1% a week is 50% or more per year. Now, do I like Alcoa? That's a different question. You either like the company or you don't. So, if I buy it that price and it stays above 65 by Friday, someone's going to buy it from me for the price I just paid for it and give me all my money back. And I get to collect the premium, which we're going to take a look at right now. Let's check this out. Alcoa. Alcoa at 65. Yay! Crowd goes wild. Woohoo! 65. There it is right there. Here we go. One contract. There it is. And Johnny, tell him what he's won. Well, Bill, we got Alcoa. 15 May, which is this coming Friday, 4 days away. The $65 call option, the current price at this moment, $65.01, $65.12. Okay, if I buy it at $65.12, sell it for $65, I'm still walking away with $178. What is my investment? Cost of the trade, including commissions and fees, $6,300. What's my rate of return? Sit tight, coming right up. Can you zoom in on that, please? Hold on a second. Sit tight. You're going to see it in a second. Calculator. Okay. I take the profit divided by the investment. That's going to give me my rate of return. Hold on. All right. Profit. 178 per contract. One contract, 178. 5 contracts, 178 times 5. Simple. All right. 178. What is my investment? Cost of the trade, including commissions and fees, $6,322. Now, if I buy it $6,322, I will never, ever, ever, ever sell it for less than $6,322. Okay, so I don't lose any money. I'm not looking to lose money. I'm looking to get 1% on my investment. So 1% of 6,300 should be $63. That's 1%. What's 178? Well, let's find out. 6,322 comes to a grand total of 2.8%. TJ, 2.8% for 4 days. It either makes sense or it doesn't. 2.8. All right, so let's save this one. We're going to blow it up for you. You ready? Here we go. This is number 5. That means we are done for the night. That's 5. Here it is, number 5. Here it comes, TJ. One couple seconds. Let the computer do its thing. Get rid of that. Let's go there. Let's go here. Let's go here. All right, you ready? Here we go, TJ. There you go. Whoops, a little too much. All right, there we go. I have to get something to white. Right, there we go. Buy one covered call, Alcoa, AA. Sell the 15 May 26th. That's this coming Friday, 4 days away. The $65 call option, look at the price. $65.02, $65.11. That's what the current price is right now. So I'm okay with buying it for $65.11 and selling it for less than I paid for it, $65, and still walking away with $178. Okay, what does that come to? It comes to a grand total of, what was it again? I forget. I forgot. Good thing I have it written down. 2.81. Okay, 2.8. There we go. There's our 5. 5 for the night. 1, 2, 3, 4, 5. Let's sing a song of 5. How many is 5? Sesame Street for those who don't know. Okay, so TJ, hope that makes sense. Number 1. Never buy something you do not understand or you do not want to hold on to. Number 2, never sell at a loss. Number 3, make sure the company is consistently profitable. I know Alcoa is consistently profitable. It's a dividend king. 5 decades increased profit. Rule number 4, weekly options only. And rule number 5, make sure all the numbers work. What are the numbers? What am I buying it for? What am I selling? What am I walking away with? Is that 1% or more? It either is or it isn't. That's it. I try to keep it as simple as possible. I'm going to grab a seat, get comfortable. We got our 5. Let's answer some questions. 5-star. Just prevailing. Randall Sparks. Johnny Boy. Uh-oh. Totally got me some flowers. Woo, thank you. Milton, Gary, Marvin, Crypt Keeper. Uh-oh, I was wondering where the Crypt Keeper was. There he is. Crypt Keeper. Patrick, 4, Melody, Hank, Johnny Montana, Little Timmy, Niculator, Reginald, Cat Toy, Rayanne, GM, Mike, 5-star. Where are you going? Wait a minute. When are you going to talk about stocks? You're talking about everything else. Oh, I'm terribly sorry. Jim, Covered Valley for Friday. I'm not quite sure what Covered Valley for Friday means. Jim, can you elaborate? 5-star. Terribly sorry you don't like my approach. I did talk about a whole bunch of stock. There was a bunch of no's, but there was 5 yeses. Delu, Quantum, Mikey Wikis, okay. User 329160 wants to take a look at Johnson & Johnson. I'll take a look at Johnson & Johnson. I guess the dividend coming up in a week, 2 weeks, but not this week. Here's your reasoning. You ready? Okay, here's the top, here's your bottom. Look, she went up, now she's coming back down. But here's the thing, last 30 days, okay? 30-day high, 248, 30-day bottom, 221. Now, you can only have one 30-day bottom. That could be today. It could be tomorrow. It could be the next day. I don't try to pick the bottoms because you never know when they're going to show up. So today is the 30-day bottom at this moment in time. But tomorrow could be lower. So Johnson & Johnson is going to be a no for today. Mission accomplished. BTBD. Never heard of it. BTBD. BT Brands. No. No options. No thank you. Plain and simple. No options. No thank you. Winner 86. Dude, how you doing? It's been a while. Dude, do you see what time it is? I'm getting ready to leave and you're just showing up. MRM. Vegas Challenge. I went to Vegas. I don't like it. I got invited back to Vegas again. And I said, oh man, do I have to? Hope all is well. All is awesome, dude. It is. It is. It is. It is. My life has never been so good. Ty Youngblood, how you doing? Camo, Desmond, Campaign Poppy. Nice. Al Khan. Good evening, Al Khan. CLS 007. Hey, Austin. What's happening, brother? Nice to see you back again. Now, Austin in 86, they've been here for over a year. Oh, my goodness. How long has it been, Austin? Winter 86. How long have you been here? I mean, coming back over and over and over again. It's crazy. It's like, got nothing better to do with your life than come here and see me. I say the same thing night after night after night. Sweet Den, what's happening, brother? Sweet Den's been here for over a year. It's like, that's crazy. Like, I can't even stand listening to myself for a year. I keep telling myself, shut up, you dumb shit. Mirror Blessing. Oh, 86 has been here since the start of 2024. Dude, don't you have anything better to do than listen to me? 2024. I was up in Boston then, wasn't I? I think I was in Boston in 2024. Morning Joe, Peter, Chaz, ticker please. Okay, Chaz, you got to see. You're the one supposed to give me the ticker to take a look at. Jelly, what's happening, Jelly? Yes, I remember your Boston streams. Yeah, they were a little bit different then. Okay, Mike, we already looked at Altria. Knowledgeable investor. Oh, back again. I remember you. Hey, James, do you ever roll your covered calls if the stock starts to shoot up? Every week. I roll something every week. Niculator, Mara. Didn't we take a look at Mara earlier? Yeah, Mara is going to be a no because it's at the high. Okay, I don't buy anything at the high, dude. You've been here long enough. You know that. Isaac Friesen, SanDisk, SNDK. Hell no. First of all, I don't know where you get the thought that I'm going to buy anything at $1,500 a share. Drew, nice of you to show up. Drew, how you doing? Okay, think about it. Isaac Friesen. Okay, so you guys I have no idea how much money you guys got. But I know this guy over here has got a whole shitload more than I do. If he's looking at a stock at $1,500 per share, yeah. Anything for tomorrow? Of course, Jim. How you doing? Chaz, thank you. Joseph. Jim at the Lowe's. Okay, got it. Season for life coach. Interesting. Don't you buy before earnings so it doesn't matter on price? Absolutely. I don't really care about the trade. But what I do care about, Jim, is the momentum. What are the other buyers and sellers doing? Because that's who we are. Okay, so every night, anywhere between 5,000 and 20 or 30,000 people will come through these 13 different channels. And we're all looking to do the same thing, make a profit. So either the stock is going up or it's going down. There's no two ways about it. It's going up or it's going down, one or the other. So Jim, 260, of course there's something for tomorrow. You were here late. There's 5 of them, 5 decent companies for tomorrow. It's not a tip. It's not advice. So hear me closely. I don't give advice. I do give some advice. When you're driving home, make sure you don't stick your head out too far. It might go home in another car. That's the only advice I give. Besides practicing. Alaska Man. Sean, the 8th wonder of the world is compound interest. Yes, I know the numbers are crazy. Ooh, what I got for you, Sean. Check this out. You're going to love this. You're going to love this, Sean. Are you ready? All right, we're going to go here. We're going to go. There it is. Hold on. This is my website. We're going to go to here, which is the weekly compound interest calculator. All right, here we go. Now, a few years ago, this didn't exist. I had to create it myself because it just didn't exist. I wanted to know how, because, my ex-wife smoked. And I said, do you have any idea how much money you're throwing away? She said, no. I said, okay, let's figure this out. So at 1% every week, that's taking a number multiplied by 1.01. So any number multiplied by 1.01 is going to give you the number plus 1%. So this calculator allows me to start off with a certain number, okay? And then I can add to it. Because think about it. If you can see it, if you can measure it, you can make changes to achieve it. All right, so the initial deposit, what am I starting out with? I got to change the color here. There we go. All right, so what are we starting out with? All right, well, let's put $1,000 in there. Okay, periodic deposits. How much are you willing to commit to on a weekly or monthly basis? Okay, so I was asking her, how much do you smoke? A pack a day? Well, a pack a day back then was like $2.50 a pack. Well, that times 5, it's $25. Wait a minute, 5, 50. It's a 10. Yeah, $12.50 a week. $12.50 a week. But that was 20 years ago. I created this thing over 20 years ago. All right, so let's put it at $20 for $20 a week. Okay, $20 a week. Let's start with just $100. Okay, so $100, $20 a week at interest rate 1%. Isn't that what we're talking about? 1% a week. So let's change this to 1%. Deposit frequency. How often do I want to deposit this $20? Once a week. It's 52 weeks. Okay. Now, time frame. Okay, at the time, it was 20 years ago, they were $2.50 a pack. Okay, well, 20 years later, because It's 20 years ago. So 20 years later, this is how much money my ex-wife had wasted on cigarettes at $2.50 a pack over the last 20 years, starting out with just $100. Okay, compute savings. I'm going to have to talk to Jacob. My thing's not working. There it is. Okay, so let's recap a bit. Starting out with $100, $20 weekly for 20 years, that comes out to, let's see if we can do this, $65,529,186. That's how much money she's thrown away smoking cigarettes at $2.50 per pack over the last 20 years. Well, we know they're not $2.50 a pack anymore, but 20 years ago they were $2.50 a pack. But $65 million. I tried showing that to her. You know what? She's still smoking today. $10, $15 a pack. She's still smoking today. Whatever. It's her life. Yeah, she left me about 20 years ago. 2003. Wait a minute. 2003. That's 20. Holy cow, 23 years ago. Thank you. I feel older now. But that's available for you to play with. It's called a weekly compound interest calculator. There's also a monthly compound interest calculator. That compounds it on a monthly basis for those of you that want to do monthly compounding. Same thing, but the numbers are hugely different. Because think about it, 1% every week is 50% a year. 1% every month is only 12% a year. Huge difference. All right, let's get out of that. All right, so next question. How does your strategy work? You buy 100 shares at 9:30 a.m. Once confirmed, then you put in the sell call option. Absolutely. Or you can do them at the exact same time. It's called a covered call. You buy the stock, you sell the option all in one fell swoop, done and over with. Zomjeb. Hey there, can we check out NWN Northwest? Yeah, Northwest is a monthly optional stock. It's going to be a no right off the top. But NWN is a dividend king, okay? But it's a monthly, and I don't do monthlies because the numbers just don't work in my favor. Sorry. All right, so I think we're done because there's no more questions. Oh, Michael wants to take a look at Micron. Ooh, Micron. Now, Micron doesn't have any dividends, and it's the hell no. Come on, brother, what are you doing? Buying at the high of the year? No. You make your money buying low, selling high, not the other way around. Michael, did they have a huge warehouse burn down? I have no idea. Employee burned down? I have no idea. J&J is low. You think Johnson & Johnson is low? Not really. The low of the year is like 140. The high of the year is 250. Now it's dropped. Not even close to where the bottom is. See, the bottom's right there. That's a long way away. That's not low. All right. So it's 10:59. KJ, we already checked out UNH, University of United Health Group, I think it is, UNH. Yeah, I don't buy at the high. I already told you that. Okay, so that's it. We're all done with questions. Dun 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 dun. All right. All right, so that's it. We're going to get some mood music, and we're going to sign off for today. And guess what? We're going to do the exact same thing again tomorrow. We're going to do this again tomorrow. You're always a day away. Okay, so where's my mood music? Mood music. And here we go.
Dive into the deep. You dream in the stars and dive into the deep. Fixing the
So you guys have a great night. What's the most amount you ever made in 1 year from options?
No matter the strain, build building your legacy through love and brain. Julie knows that fire in your soul, the kind that lifts the broken heart. James, you reach the sky.
Okay, I gotta pause this for a second. I got one comment over here. Marshall Lynch doesn't allow to purchase and sell at the same time. All right, let me revisit that for a second. Okay, when I say buy and sell at the same time, I'm talking about doing a covered call. Any covered call whatsoever. Okay, check it out. I am buying 1,000 shares, and as soon as it fills, I'm selling 10 contracts. Same thing. I'm buying and selling at the exact same time. I buy it. Within 2 or 3 seconds, I am selling it. Same time. One order, buying and selling at the same time. Okay? There you go, pumpkin. Enjoy. All right, where was I? It's my mood music. All right, have a great night. We'll see you again tomorrow. Retired, you say. That's good. But the podcast is rolling, rolling.